The four phases of the stock price cycle. The stock prices of every company fluctuate through a cycle consisting of four phases. In the chart of Digital Turbine, Inc., APPS, you will notice, in order, the base, A, the rise, B, the top, C, and the following drop, D. This cycle can be compared to the growth of crops. The quiet, low-level period called the base can be termed the accumulation period, similar to the dormant period of the crops during the winter. The rise of APPS is called the markup, analogous to the period when the crops emerge from the soil, and its growth is well underway. The top range is called distribution, resembling the time when the crops are harvested, and the growth ceases for the season. The inevitable drop in price which follows is known as markdown, during which phase the uncollected crops are rotting. Remember these terms: base, accumulation, rise, markup, top, distribution, drop, markdown. While the cycles of a year, our exact price changes vary so widely in the timing and magnitude of the moves that few have learned that these cycles do exist. By the use of charts using the monthly price range of a stock, it is often possible to see by certain patterns of price actions over a number of years what phase of its cycle a stock is, in giving you a clue to what its next phase will be. Bases. A base is formed during a period of accumulation. This is when the smart money are buying at bargain prices while the public/dumb money is selling. Sound bases are easily seen when the prices of stocks have been extremely quiet in a low range for a period of at least 3 years. When a stock breaks out of a sound long-term base, you can expect at least a 200% move higher. A stock is never a bargain unless it is in an area where it is changing from weak to strong hands, changing to those who know what they are doing and won't get shaken out by minor fluctuations. It is up to you as an Investolator to determine, with the use of charts, where that area is. It may be extremely low, or at times, it may be near the all-time highs of a stock far above the previous bottom range. An Investolator is someone who has the patience of an investor and is willing to hold on to a position for years, but uses charts like a speculator to improve his timing. Unlike most speculators, you'll be using monthly charts as opposed to the daily charts the majority of them use. In order to determine what phase of its cycle a stock is in, you must understand the public sentiment concerning it in the past and at the present. If you can determine this, you will know what it will do in the future given time. To understand this, you must realize that the price action of a stock is what influences the public to be bullish or bearish. If a farmer plants shallow-rooted crops like lettuce or radishes, he does not spend years preparing the soil. He simply tills the surface and sows the seeds knowing they will sprout quickly and be harvested soon. But if someone sees a farmer carefully tending a field for years, enriching the soil, pruning saplings, and patiently waiting, they can be sure he is growing something much greater, perhaps a mighty orchard that will bear fruit for a long time. Likewise, few realize that years of quiet preparation are the foundation for lasting success, not just a fleeting rally. You, as an Investolator, can learn to develop fair judgment in making an estimate of how much of a rise can be expected from the various types of bottom actions and the time involved during these actions. These foundations are not made with soil. Their built-in strength is derived from inducing the public to sell out. The higher percentage that are sold out, the sounder the base. It's as simple as that.